All right. Again, for those of you who are just joining us, thank you for joining us. My name is Dalen Niarco, and I am of counsel for Hyde Legal Group, and my background is in tax controversy. So, if you think about it, if you have any issue with the IRS, if you owe the government money, if you have concerns as to how to decrease your tax liability, we also do a little bit of tax planning, but our primary focus is in tax controversy. So this should be a really good presentation. Hopefully, you'll find something that you can um, glean something from. You can have some takeaways as it relates to your business. Maybe you don't have a business just yet, or you're interested in starting a business. This is a great precursor to starting a business, especially as it relates to tax deductions and how beneficial tax deductions can be, and the way to maximize them without them not falling into the category of hobbies. So again, the topic is small business tax deductions. Can you deduct too much? All right, so I will go ahead and start the slide here. And this would be a great presentation to take notes on. The government is very, very particular about this topic. One of the things that we really benefit from is we benefit from taking tax deductions. So you can imagine if you're not taking the tax deductions, that means that you're going to owe the IRS. So the purpose of this conversation, and I'd like to make it more of a conversation. So if you have any questions, please feel free to let me know. We'll have our contact information at the end of the presentation, and that way you can set up a consultation and you can ask as many questions as you like. This focus is something that is very prominent when you are talking about businesses. With small business owners, one of the things that small business owners benefit from is when you have a business, of course, you're allowed to reduce your tax liability by telling the government how much you actually spent to maintain the business. So, for example, if you have, let's just for ease of use, let's make it quite simple. Let's say you have a hair salon. The hair salon earns $50,000 a year, but between the cost of supplies, between maybe hiring and advertising, you spent $30,000. So instead of the government taxing you on 50,000, essentially what you tell the government with your tax return is, okay, government, yes, I made $50,000, but I spent $30,000 to maintain this company. Therefore, I need to be taxed on only $20,000, right? So when it comes to generally in business, you have gross sales, how much you earned in your business, and then you also have the cost of doing business. What did it cost you to earn that $50,000? We're going to be talking about a nuance of that cost of doing business to make sure that we're within the parameter of truly telling the IRS or basically sending to the IRS an image or a narrative of what it costs you to actually run your business. Year by year, of course, it fluctuates, but this is a way that you can not only tell the government what you're earning, but the best way to do so so that the government does not turn around and challenge you on whether your tax deductions are too much. Okay, so we're going to try to identify what is that fine line. What is that fine line as to how much you're earning, how much you're spending in your business, and the amount that you're telling the government that you actually spent in order to maintain those gross sales. And there's something called a hobby loss. With the hobby loss, what we're going to be focused on is we are going to be focused on when the government looks at your actual tax return and they have determined that you have taken too much in tax deductions. So let's start with a little bit of context, okay? When you have a business, it's not just earning money, it's not just advertising that you have a business. The government is looking for something very specific. What they're looking for is that this business is actually earning a profit. Okay. So let's talk about that a little bit. If you have a business, let's say you're just starting out. I like to say just starting out can be anywhere between 1 year, even up to 5 years. Let's say you rebrand or you've made a pivot in the business. Maybe you brought on a partner. Perhaps starting over can be well into year 6, year 7, depending on the facts, depending on the facts and circumstances. But in general, let's say you're in year 1 and you are a brand new business. You have you have some capital, or maybe you don't have capital. Maybe you're just learning to get your first client and you're just starting out. What is the government looking for? Well, obviously, in year 1, they're not expecting you to earn this huge profit. But the key is eventually, at some point, the government is looking for you to make a profit. So let's go back to our example that we used before. Let's say you have a hair salon. You're earning $50,000 a year. In year 5, year 6, year 7, what we want to see, at least as it pertains to the government is going to want to see that you're making a profit. In year 1, it's not unusual for a business to spend more than it makes. So if this hair salon earned 50,000 or the gross sales were 50,000, but let's say the expenses were 100,000, clearly there was no profit. In year 1, that's no big deal. Okay? In year 2, even still, no big deal. Let's say within the first 5 years, if you're not earning a profit, that is not unusual. What the government is looking for is that business truly a business? So if essentially the goal is to make a profit, that's what the government wants to see, right? They want to see that you're actually making money. You're actually earning money. So if you think about it like this, if you earned 50,000, what the government is going to want to see is a trajectory of either you making more or you're spending less than what you earned so that you can make a profit. So if you are making 50,000, again, if you spent 100,000 in that business, you haven't made a profit. But if you're earning 50,000 and let's say you only spent 10,000, let's say you got really efficient with your spending. Maybe you didn't hire as many people, or let's say your advertising was more cost effective. Well, take that 50,000 minus 10,000, and now you have $40,000 in profit. The government is going to want to see that you're paying taxes on said profit. Now, let's say you're doing something that you really enjoy. You don't make money from it, or let's say even if you do make money, you're not making a lot of money. Can you take a tax deduction from that hobby, if you will? The answer is, well, it depends. In your hobby, are you doing that activity with the intent of earning a profit? Or is it something that you simply enjoy doing on the side? Maybe you don't earn as much money doing it, but let's say you are earning some money. The government is very clear about hobbies versus actually running a business. When it comes to a business, think of the word profit. What is your intent? What are you actually doing it? Are you doing it just for the fun of it, even if you make money on the side? or are you doing it with the intent to make a profit? That's going to be your parameter. So throughout this webinar, if you're thinking about having a business, or even if you have a business now, just because you're earning money does not necessarily make it a business. Okay, so just remember that. It's not the act of making money that makes it a business, it's the intent. Do you intend to make a profit? If you intend to make a profit and you can show that that intent is there, then you can safely deduct your tax deductions, right? You can safely have expenses in your business that you can tell the IRS so that you can decrease your tax liability. That is so important because it makes a big difference as to what you actually earn in the business, what you actually report, but more importantly, the tax that you end up paying. So you might ask, what is a hobby? Let's use our example, the hair salon. Let's say that you enjoy doing hair, okay? You do it, you just do it for friends. Maybe they give you a call and they say, oh, I really love you to do my hair. Maybe they give you a tip. Maybe they give you some sort of gift for doing their hair. This is an example of how you can have a business and it could either be a hobby or it could be a true business. And I'm going to use the word business and hobby interchangeably, but I'm going to be very specific with these examples so that you can understand how someone may feel they have a business, but the government is going to look at certain things to determine that instead of having a business, you actually have a hobby. So let's say that you're earning money, whether it be tips, whether it even be barter. Think about barter as you do something for me, I do something for you. So if someone calls you and says, can you come over my home and do my hair? And you say yes, only if you promise to take me on a trip. Is that something that you do often? Is that the way you do business? Is doing hair something that you enjoy simply because you like it? You don't really intend to make a lot of money from it. You're certainly not intending to make a profit from it. That's clearly a hobby. So if you enjoy something, there's no intent to make a profit from it. And I want you to be very careful when it comes to bartering, because technically, when you barter a service, that is a form of doing business. It's very important how you document this information and present it to the IRS. Okay. When you are running a business, you have to think about it in the sense of how is business conducted? What are you doing? Are you keeping accurate records? Are you documenting? Are you sending emails? Do you have a website? While it's not necessary to have a website, and while the government does not look at an exact list as to what constitutes a business, remember our main focus is going to be on the profit. The facts and circumstances of each person may vary, right? So you can have, let's say, for example, someone calls my office and there are five hairstylists. What we're going to do is interview each person. They accept credit cards, they have an appointment book, whereas the other person may just be doing hair on the sides. And keep in mind, these rules can apply to so many different professions. Let's say you're a physician, you work at the hospital, but let's say that every now and then you're giving advice to family and friends, maybe at no charge, or again, maybe at very little cost to your family and friends. Can you take a tax deduction from that? Well, one is clearly at the hospital. The hospital is run very much so like a business. You show up, you're clocking in, you're seeing patients, you're working with the insurance company. Clearly, you can make an argument that as a physician, you're running your practice, you're running a business. But what if you are giving medical advice? Are you charging for your medical consultations? Are you documenting that you run a medical consulting company on the side? What is it you're actually doing? So I want that to be very clear. If you're unclear as to what side of the spectrum you're on, hobby versus business, write it down. What is the purpose of your activity? Are you doing the activity because you enjoy doing it? It's just for pleasure? For example, you have a medical degree, you love helping people. You're not looking for anything in return. Well, an argument could be made that that is clearly a hobby, right? So you're doing something because you want to help others. You don't charge, it's all complimentary, very, very very far and few between are you accepting anything, whether it be tips or anything like that. That could definitely be a hobby. Okay. The goal is not to make money. Instead, the goal is to help others. What the government looks at is what you are doing, how you are doing it. Okay. What are your actions? What's the goal behind what you're doing? What is the end goal? You can call it a business, but it doesn't necessarily mean that it actually is a business. Okay. Now, what happens if the government audits you and you believe that you're running a business? And on this business, let's use our hair salon business as an example. You enjoy doing hair, okay? And you've made a little bit of money from it. Maybe someone may have sent you some Zelle payments or given you some tickets out of town, but they've given you something for it. And you say, well, I have spent money buying hair supplies. I've gone to purchase so many different things: shampoo, conditioner, hair color, you name it. I really enjoy this. And so I'm really into it. And I have spent $10,000 over the course of the year. And I've spent this $10,000 purchasing all of these supplies. So I'm now going to put this on my tax return. Well, remember, you have to tell the government how much you made. So let's say, for example, let's use the $50,000 example. You made 50,000, but you spent 10,000. Well, there's a $40,000 profit. So the fact that there's a profit is a clear indicator that this is most likely, more than likely, a business, right? Because the government is going to tax you on that $40,000 of profit. Now, let's take that same example and say that you received maybe 5,000, but you spent 25,000, okay? You made 5,000, you spent 25,000. Let's look at year 2. Let's say you didn't ask much because you really wanted to perfect your skills. And so you didn't ask anyone to pay you for the service, but instead, while you're perfecting your craft, you're still purchasing a lot of supplies. So year 2, you make nothing. Okay. So 0 would be your total of gross sales, but you're spending 25,000, 50,000. Can you take that as a tax deduction? Well, if the government comes in to look and clearly determine whether your business is a true business or whether it's a hobby, once they look at those facts and circumstances, if they determine that you're really doing it because you enjoy it and for nothing else, meaning that there is no profit, you're not intending to earn a profit, the government can say, yes, I see that you spent 25, 50,000, however much on supplies, but you can't take that as a tax deduction. So even if you have a receipt, okay, you have a receipt, it's clear let's say they ask for your bank statements and they can see you used your credit card or you used your debit card to purchase these supplies. It doesn't matter. Because if the government determines that the intent itself is rooted in pleasure and pleasure only, then they can disallow your tax deductions. Okay? So if we use the example of 5,000, you earned 5,000 in year 2, you spent 25,000, the government is not going to allow you to claim that loss, right? Because that's clearly a loss. You earned 5,000, you spent 25,000. There's clearly a loss of 20,000 there. The government will disallow that. Instead, you're going to have to pay tax on that $5,000. Keep in mind, just because your tax deductions are not allowed because the government deems them to be a hobby, it doesn't mean that you're exempt from paying tax on the money earned. So if you earn $100 in hobby income, you still have to pay tax on that income. I'll give you another example. Let's say that you are selling clothes. There are different platforms that you can go online and you can sell clothing. Maybe it's eBay, Poshmark, or something like that. If you decide that you want to sell your clothes, maybe you do a clean out of your closet once every quarter. It doesn't matter. You are still going to be taxed on the money earned in general. Let's say you do this as a side business. You don't you're not trying to open up a store, you're not trying to open up some sort of retail business, but you do it on the side. Again, a hobby. It doesn't matter. Even if the government denies your tax deductions or disallows your losses, your hobby income is still going to be taxable. So that's where tax planning or tax strategies really come into effect. And so you really have to decide if it's going to be worth it to even participate in those hobbies and earn income, or what effect those hobbies will have on your overall tax portfolio. Okay. Again, if you're on the fence about whether you have a business or a hobby, the facts are going to be the big determining factor as to whether the IRS either disallows your tax deductions or determines that you're running a true business. What are they looking at? We briefly touched on this earlier. Your records. Now, you may not have, let's say you're just starting out, you may not have the ability to have corporate bookkeeping done, or maybe you might not be too well versed in what that entails. What do your records look like? If you have the hair salon business, are you documenting the clients that are coming in? Something as simple as writing down their name, what their service is, and how much they paid you. Okay? It could be something as simple as that. What is it that you are showing to the government to indicate that the goal of this, even if it's not perfect, remember, you're just starting out, even if it's not perfect, you are running this in a way that indicates that you are operating a true business. What are some examples of things that you can show? A bank account. So in the beginning, I noticed that many times when people are just starting out, one of the things that they do is they tend to have a personal account and they merge or they mix their personal account with their business account. One of the things you want to do, even if it's a small, simple business account, you want to get something that is in the business name. That is going to be a clear indicator to the government that, yes, even though you may not be making much of a profit, government, I do intend to run a business. See, I have a bank account in its own name. What kind of records are you keeping? Let's look at the type of records. I have represented individuals who may not have been the best at record keeping, but if you can give me something to show that there was an effort being made, I can work with that, right? Some people, let's say you're on the go and you get a client and you put something in your phone. That's okay. We want you to finite that, make that, you want that to be fine tuned later on as you grow in your business. But let's say that someone calls you for a quick consultation or for a meeting and you briefly put it in your phone. If I can capture that, that would be an example of something that I would show to the government that is proof that you're intending to run a business. You may keep notes in your phone. You might send yourself voice notes. Do you have your own separate email? Even if you don't have a website, you can have a separate email that shows that this is separate from, say, your personal email. You want to show the government that at least some effort, while it may not be the same effort as, say, a large major, multinational corporation, you at least want to show the government, even if it takes you a while to bring your business to where you want it to be, you want to show the government that there at least is an attempt. What is it that you're doing? When we interview people, that is the one thing that we're looking at. Are you making an active effort to show the government that you have a business?
Thank you,
You
ma'am.
know,
Hey,
are you, let's say, for example, paying your
No,
bills?
I'm
How do
looking
you
at the
pay your
small
bills?
business tax deduction.
Do you pay your bills with the
And
income that you earn from the
I've been
business?
looking at
That's the sort of thing that we're looking
put
for.
it there.
How do you
I did put
sustain
that
yourself?
there.
That's what we're looking for. Now, this is, if you look at the last bullet point, this is a point that's really important. When it comes to profits, many times people will say, well, you know what, Dalen, I'm just starting out. I haven't made a profit in 5 or 6 years. One of the things that we'll do is we'll look at that and we will see, is it truly the case that you haven't made a profit? Or is it a situation where perhaps you're deducting too much? We want to make sure that we are deducting actual things that are business related. I'll give you an example of a situation where, or a circumstance where someone could possibly deduct too much. Let's say that you drive. Okay, let's say you're a real estate agent and you drive for your business. You pick up clients, you go to real estate networking events. Great. You can deduct the mileage, for example, that you use to go back and forth to these networking events, to travel with your clients to see different properties. You could take the mileage for all of that. If you are taking mileage for things that are not business related, that's one of the things that we will take and isolate and take out of your, let's say, your car and truck expense or your travel expense. So if you are constantly every year you're not making a profit, your profit is essentially zero. What we do is we look to see, what are your tax deductions? Are you including tax deductions that should not be there? Let's say that you are in we see this many times, maybe after work, you're part of a group that loves to play volleyball, beach volleyball, or you're part of a soccer league. Even though it might be work related, or even though you might go with your colleagues to go and play some sort of sport, are you taking tax deductions for that sport just because you're doing it for just because you're doing it and it's somewhat related to networking or somewhat related to your business? That is where these questions are going to be extremely important to determine, how are you calculating your profits? Are you truly identifying profits, or are you including tax deductions or what appear to be tax deductions in things that are not truly tax deductions? And what we have found is sometimes small business owners are deducting way too much, so that in essence, every year it looks like you are making nothing, when in reality you are making a profit. So the key question here is, are you making a profit? How are you calculating the profit every year? Okay. What are you doing to show the government that you're making a profit? And if you are making a profit, what is it that you are showing to indicate that these things are truly tax deductible expenses. If you have a business, again, it's not unusual that you may not make a profit for a while. It doesn't mean that you have to make a profit right away. That's not what the IRS is expecting. In fact, many times we see that small businesses struggle right in the very beginning. You're trying to find your footing, you're trying to find out what expenses are going to be cost effective. What is it I can do to make sure that I'm running my business the best way I know how? And you have some growing pains. Usually, those growing pains are within the first 5 years. But again, if you have tax deductions that are uh, tax deductions that are not standard, let's say industry standard, that is going to be an issue. I'll give you an example as to how you can overextend yourself when it comes to tax deductions. Let's say, again, using that hair salon. The hair salon, you run it, it's a local hair salon. So you run it here in Austin, Texas, for example, and it's local and it has a physical location. But on your tax deduction, on your tax return, you're indicating that you spent $50,000 in travel. Well, the government often looks at travel expenses because they know that's one that's highly inflated. The question is that industry standard? What about your business would indicate that $50,000 of travel in your business is reasonable? Could that be contributing to your constant losses? That's what the government is going to be looking at. So you want to make sure that the business expenses that you have are related to the service or the goods that you provide. So let us say that as a hairstylist, I travel to different hair shows and I compete. Now my business travel might be more conducive to what I do. But if you have a small business, you're not doing any travel like that. You're not going to hair shows. You're not doing things that really would warrant $50,000 of travel. The government is going to disallow that tax deduction. Okay. The goal is a profit. If you are not in the business to earn a profit, the government is going to take that money that you said you spent and they're going to remove it from the tax return. That is going to increase your tax liability. Okay? Focus on profit. And essentially that's the goal, right? That's the goal, profit. I want you to look at some examples. These are examples that many times have been audited. These are examples that the government looks at when you claim a business on your tax return. So let's take a look at Sarah. Sarah is a piano teacher. She offers piano lessons, not often, but as you can see here, it's just occasional. Now, because Sarah loves the piano, has been teaching it for a while, and loves playing it, she really wanted to invest in a very expensive grand piano. So, grand piano, maybe it cost her $100,000. Well, if she's offering the occasional piano lessons, let's say a piano lesson is $100, and she offered these lessons, just when she felt like it, no big deal. Or people said, hey, can I come by and ask questions about the piano lessons? And she offered to teach the kids in the neighborhood. Does that mean she has a business? Well, let's look at the facts and circumstances here. She does this rarely. She doesn't advertise. She doesn't have any records. She's just doing this as a hobby. So even though she enjoys doing it, let's say she often plays, or what we'll hear a lot is, I spent a lot on this item. Here, a grand piano. Grand pianos can be very expensive. She spent a lot on it. Does it make it a tax deduction? No, it doesn't. Why? For the reasons we discussed. The record keeping. She's not operating the business as a true business. She is operating in such a way that would lead the reasonable person or the auditor of the IRS, she is operating in such a way that would lead someone to believe she's doing this as a hobby. Therefore, even though she spent $100,000 on this grand piano, it makes no difference. You cannot take it as a tax deduction. Many times people will look at the amount they spent, especially when it's a luxury purchase. It does not matter. Again, our focus is going to be on profit. Am I doing this to earn a profit? If you're doing something occasionally, if you're doing something without advertising, if you're doing something and you're not keeping copious records, the government can look at that and most likely will look at that as a hobby. Okay? Let's look at the photographer. Okay? Someone loves taking pictures. Buying expensive equipment does not make this a business, okay? No marketing, doesn't track money. In fact, maybe even is doing a lot of the work at no cost, okay? That is going to be looked at as a hobby. The fact that the photo equipment is so expensive does not make it a tax deduction. So you want to look at the times that you're actually doing the work. One thing I look at, and the government is very keen on this, is when you present your records, are you presenting your records for the audit or are you presenting records that are contemporaneous in time to when you actually made the record, right? So let's say that you're a photographer and you have 5 photo shoots. Are you documenting for the audit that you had 5 photo shoots? Or when you have those 5 photo shoots, are you indicating, oh, I had Susie, I had John, John's photo shoot the next week? Are you documenting at the time of the photo shoot? That is going to be the key. Make sure that you keep your records and you document them at the time that they're the most important. Okay? Don't just start getting records together for an audit. While it may help, the government often frowns on that. They want to see that you documented, that you indicated what you were doing in your business at the time that you actually provided the service or when you sold the good. Occasional work is a red flag. Occasional work symbolizes to the government that instead of running a true business, you're really just operating a hobby, if you will. This is something that I see a lot in my practice, especially in the South, actually. So you've got great weather, you've got a lot of land, and let's say that with this land, you want to have horses or you want to have livestock. The question is, are you running this in a way that indicates that you intend to make a profit, not because you enjoy having horses, not because you enjoy having livestock, and not just because you have the land and you can have livestock, right? You have the space for it. All of that is great, but the government wants to see what is it about this that indicates to them that you are running a business. So let's say you have the horses and they're show horses. Great. Are you booked for shows? I tell people that even if you don't have the best notes, take pictures. If you have if you're in the horse business, and there's so many ways you can be in the horse business, right? You could have a petting farm. You could have horses that are show horses. You can have a breeding business. You can have there are so many ways that you can run a certain business in a certain industry. How does it fit your specific circumstance? Having a farm does not necessarily make it a business. But let's say that you have livestock, but the purpose is to, let's say you have chickens. The purpose is for the chickens to lay eggs so that you can sell the eggs. Now you have the propensity for a business, right? Because you're You have the chickens for the purpose of selling the eggs. How are you documenting this? While you don't necessarily have to have this very, very strong business plan, the question is, do you have the intent to make a profit? How much are you going to sell your eggs for, right? How much are you going to sell them for? Um, how much are you selling them for? Do you have emails where you're talking back and forth with potential clients about what you're doing in your business, how long you've had your business, if you're running a sale? If you just look like year after year after year, you're just enjoying your time on the farm, even if it's very expensive, it doesn't matter. The government is going to look at that. And can you imagine the expense of the land, the property taxes, the animals, very, very expensive business. Just like the horse business can be very expensive. Some people are purchasing horses for $125,000, $150,000. It makes no difference if the goal is not to have a profit. Okay, the government is very keen on hobby losses. They know what to spot. So now the question is, you want to be extremely vigilant in your business so that you know what red flags the government is looking at. Okay, focus on the luxury items. Anytime you have luxury items, ask yourself, is this an item that the government is going to identify as a true tax deduction just because it's very expensive? Think about our grand piano, think about our horse. It doesn't matter. You must show that it is a true tax deduction. Another thing is your income. If you were, remember the barter we were talking about? Even if you barter, barter is still taxable. Okay? Document. A barter is still taxable. But when you're doing something occasionally, you're not getting much money from it. That is something that the government is going to look at. And another thing to remember is that you can, let's say you run a hobby for 5 years, okay? You run a hobby for 5 years. The government does not find out until 5 years later. You could potentially owe 5 years of back taxes, plus penalties and interest, okay? So let's say that you have been running a hobby, the government hasn't said anything to you, they haven't sent you a letter, they haven't come to knock at your door, which they will do sometimes, especially with criminal tax liability. The government may not say anything for quite some time, but when they are auditing you, they may audit you for a particular year. And if they see a pattern, they may go back and audit you for multiple years. So if you're running a hobby for 5 years, and the government doesn't find out until year 6, you would potentially owe back taxes, penalties, and interest, which is daily, okay? Daily. So you want to be very, very careful about identifying whether or not you truly have a business because the daily tax can get very expensive. Look at who you are doing things for. Are you holding yourself out to the public as a business professional? Or are you doing things for friends, family, maybe even just your neighbors? Are you limited in um, the people that you serve, right? Or the people that you provide goods to? Is it just the people that you know that are around you? The government is going to look at that, okay? I had a situation where in an audit, the government um, uh, wanted the client's phone records. The government was going through the phone records to determine if in the business owner was calling actual clients as opposed to just people he knew. They get very, very detailed in these things. So you want to make sure you separate who are you doing the business activity for? Okay. Is it something that, oh, I purchased this big luxury item. I'm only working with family and friends. Those things together, the government is going to see as a red flag. So you want to make sure that you are doing things in such a way that it shows that you are working for the general public or you work with the general public. Even if you don't, let's say you work with a very select group of people, that's fine. But you want to make sure you're not limiting yourself to just a small group of people, maybe in your personal, in your personal circle. Okay. Be intentional. Be intentional. If something industry standard is 10,000 and you charge 2,000, the government's going to look at that. If you charge $2,000 every year, year after year after year, the government is going to question that. Why are you charging so little? Are you doing this because it's not truly a business? Or are you doing this because you truly are you trying to scale slowly? There are different reasons that a person may choose to price their services or their goods low, especially in the beginning. But the question is, are you doing that year after year? That's going to be what the government looks for, is a pattern. Okay. You want to make sure that every year or every couple of years, you're doing something intentional to show that you have the intent to make a profit. If you're a hairstylist, you may offer low prices to get people in the door. But 5 years later, if you're still offering those same low prices and you're not making a profit, the government is going to look at that. So you want to make sure you do things to indicate that you are truly making a profit. Are you advertising? It's one thing to advertise to just the people around you, but are you advertising perhaps with social media, perhaps sending out an email blast? What are you doing to show the government that you intend to make a profit? Make sure with your business, if you're unsure what it is you need to charge, do some research. Look up online. You can actually look online based on your particular locale. Maybe in a certain industry, a price for a business in San Antonio, Texas, will differ vastly from that same business in New York City. So do some research and charge what is realistic. Okay. Again, focus on the profit. The profit is going to be the bottom line. The government is going to look at these case by case. They're going to look at what you're doing weekly, monthly, what you're doing overall. Why is it year after year you're not making a profit? That indicates there's a hobby. Okay. As we indicated before, you want to deduct the expenses that are ordinary and necessary. The Internal Revenue Code is very clear. You want it to be ordinary and necessary. If you have $50,000 in travel for your business, be prepared to show why that $50,000 is essential to maintain your business. Are you advertising? Are you networking? What is it that makes this particular transaction something that is necessary? Now, with all of the electronic receipts and Zelle and PayPal and all of these things, it's so much easier to keep receipts if you have paper receipts. I would definitely urge you to switch to electronic. Keep a record because the government does not come right away. You can operate in such a way where maybe it's a hobby, maybe it's a business, and they don't say anything for 5, 10 years. You want to be able to maintain those receipts you had 5 years ago. If you don't have those receipts, the government could easily say without those receipts, they may give you some slack, but it really depends on your auditor. But the government may say without the receipts, we're going to disallow your tax deductions. And of course, that's where we come in. Contact us. If you have any questions, we will be more than happy to have a consultation with you. We could draft a memo. We can go deeper into your tax return, deep into your business to show the government why certain things are tax deductions as opposed to hobbies. Okay? Don't worry about just starting out. Don't worry about shifting in your business. The focus is, do you intend to make a profit? Sometimes I'll sit down with a client and let's say for 7 years they haven't made a profit. What we will do is we may even strategize to find ways or things that can be done to indicate to the IRS that the intent truly is to make a profit. Okay. As a lawyer, I'm going to be focused on intent. What is the client doing to show that the intent is to earn a profit? I don't want you small business owners who are working diligently in your businesses to have your tax liability increase simply because you're unaware of the hobby loss rule. Focus on earning a profit. If it's been difficult for you to own a profit, and the reality is post pandemic, it has been difficult for small businesses to pick back up. The government is going to be crucially looking at what you are doing. So what we can do is strategize to find out specific ways that you can show that you're earning a profit. You may not even have a profit right away, okay? You may not have a profit right away. All we need to do is show that you are attempting to make a profit. And we can go over that in a tax strategy session. We can show you ways that you can make it clear to the IRS that you are in business to make a profit. Therefore, all of your expenses should be tax deductible. Tax law changes often. It just changed this year. So you want to make sure that you're abreast with all of these rules and you are in business to make a profit so that you can realize and maximize your tax liability. You really want to focus on these tax deductions. Instead of paying the government the most amount of tax, you want to maximize and realize all of the tax laws, the rules, provisions that make it possible for you to continue your business. You want to make sure that the rules that you are implementing in your business are such that you are truly taking advantage of what the Internal Revenue Code is there for. It's there for the small business owner. It's there for you to continue in your practice. It's there for you to realize a profit, to earn money from your business. So you want to make sure that you're not blindsided from some of these rules that you may not be too familiar with that will result in you paying more taxes to the government. That's essentially what this is. So, with a hobby, make sure you're clear that it's a hobby. If it's a business, make sure it's clear that it's a business. If you are not clear about that, do not hesitate to contact us. I know Sierra is amazing, and she will help guide you as to how you can contact us here at the Hyde Legal Group. But I definitely thank you so much for coming, and hopefully you can walk away with a great sense of whether or not you have a business or hobby. And I really appreciate your time. Thank you so much.